Hey everyone, in this video we're going to be doing an introduction to trading gold and miners. I'm going to talk about the ways that I trade this space, some other ways that people trade this space, and some things that we need to know. So this is going to be designed for people that are just now starting to explore this sector, and I do believe that there are opportunities approaching, so we'll wrap this up the second half of the video going over charts and this longer term setup that we're looking for clear breaks in for volatility to return to this space. So right now, not a great trading environment. There are definitely trades to be had, but I'm looking for the longer term breaks that are going to give us a lot of volatility and opportunity, and it's not here just yet. So starting it off, the players in this space, the dollar, which you can track on tradingview.com or wherever with DXY, the gold and US dollar, which is XAU USD. That's what I watch the most when looking at the price of gold. And in general, there is an inverse correlation between the dollar and commodities. So if the dollar is strong, that means commodities are weak. Obviously, the correlation and the strength of this relationship is constantly changing, but just in general, rule of thumb, strong dollar, weak commodities, oil and the dollar, and natural gas and things like that. So if we see the dollar dumping, we look for the gold bulls to be showing up. So there are also miners, and miners are the companies that are mining the gold, and they are directly affected by the price of that gold. The higher the price of gold, the more profitable these miners are going to be, so their prices go up as well. So there's senior miners, which are more developed companies, larger market caps and things like that. And these are on a global scale, not just the US or not just Canada. And there are junior miners. These are smaller companies, and they generally trade correlated to each other. But again, the strength of that correlation changes. So what I will do is compare them to each other and say, all right, the senior miners are stronger. So if the gold bulls show up, I'm playing NUGT bullish. And if the gold bears show up, I'm playing JDST bearish. So I will take the smaller name, or I should say the weaker name, and play it bearish, and I will take the stronger name and play it bullish. And that oftentimes means I'm switching between junior and senior miners. So they are 3 times leveraged. Leveraged means that for every percent that GDX goes, NUGT is going to go up 3% to the upside, and Dust is going to drop 3%. So you don't have to short these names ever. You can just play the inverse. So for those people that are comfortable just only going bullish, that's what ETFs really allow for, you to bet against something but want the price to go up. So if I'm betting against senior miners, if I have a position in Dust is going to be going up as the miners and as gold go down. So these are the leveraged names that I play the most. They have the most volatility, obviously, with 3 times, and there were times back when gold was volatile before we got into this tightening long-term range where these names would have 10% days, and that would obviously be significant opportunity. So we'll check in some charts on these in just a bit. There's other tickers to be watching. I'm not going to go through them all. This is actually a member that has an uncle who's a bit of a gold bug trader. So there's names here on the Canadian exchanges, the US exchanges. I'm not going to run through them all, so pause it here if you want to write these down. These are individual companies, and obviously the ETFs are a basket of companies. And with trading these individual companies, absolutely you can do it. But for me personally, that would require a little bit more research that I want to do. I want this to be easy and just a sector that I can jump to while I'm trading other sectors, and just sticking to those ETFs that were on the previous screen make that very easy for me personally to just keep an eye on those things, not worry about individual companies, and just be a short-term trader. So important points to note about this space: time decay. So if you are holding long-term, and long-term meaning anything more than a couple weeks, you're going to be subject to time decay. So these leveraged ETFs, in their fundamental being, the way that they are calculated, there is time decay built in. So over time, long-term, they go down. So you don't want to ever be invested long-term and just sit on leveraged ETF positions, because the more sideways the trading, the more time decay is a factor. And again, it's just giving away money and eroding. And oftentimes some people will short short leveraged ETFs with the incentive of it going down with time decay helping out. So just be aware that if you are going long term, this is never something that I would tell someone to put in their portfolio looking multiple years out, because you're just giving away money with that time decay. Stock market correlations. So with these individual miners and the leveraged ETFs, they are subject to what the stock market is doing as well. So not only does the price of gold affect these names, but obviously the market and the correlation to the overall market as well. So if the S&P 500 is dumping 2% today, then even the gold bull stocks are going to be negatively impacted by that. So the most bullish scenario for trading bull miners is when gold is going up at the same time and when the stock market is going up at the same time. That generally does not happen often, but when it does happen, that's when those gains are magnified the most, because you have essentially all currents going in the same direction. Whereas if you have, gold exploding to the upside, but the market's pulling back a little bit, the bull miners are not going to be necessarily as strong as if the market was bullish as well. So that's something to note. And always watch that relationship. How do these ETFs and how do these miners react to what the overall market is doing as well? So the main things that I'm watching, if I'm trading gold, DXY, XAU, USD, the overall market with the S&P 500, and then of course those individual ETFs to be keeping an eye on as well. There are other things that can affect these miners and the price action in gold and the dollar. And FOMC is the meeting of the central bank in the U.S., and it generally is where monetary policy is set, and they give an outlook into the future as well. That is the most significant event for the dollar, really, the most significant scheduled event, and we usually see significant gold and dollar reactions, especially when, what comes out of the Fed is not what is being anticipated by the market. So that's worth noting. Foreign central bank policies and rate raises or cuts in rates, things like that, always worth keeping an eye out for. And just financial data, the jobs report any given week can have an impact on what the dollar and gold is doing as well. So again, this video is just an intro and a basic stepping stone for you to go out and do your own research. So just looking at that alone, important events, you might say, oh man, that seems like a lot of stuff I need to be keeping an eye on. Well, Google gives us anything that we want to know. So we hop on Google, data that affects gold, first article on the Motley Fool here, and it's going to give us some good information in terms of 7 common factors that influence gold prices, information on monetary policy and Fed speak, economic data, supply and demand, inflation, currency movements, ETFs, uncertainty. In general, people feel gold is a safe haven asset. So when the market is showing weakness, gold generally, we look for gold to go up. In the pullback, we had a February dump in 2016 in the market. Gold did really well. The bulls shot up. When we had the market collapse in 2008, gold did not go up nearly as much as you would have anticipated it to, with the market completely collapsing. So there was fear everywhere back when it was really bad. But in a general, market cycle where we have a ton of volatility and a pullback, we look for gold to go up. So that's another correlation in general, rule of thumb, to be aware of with the market overall. So again, jump on Google, start poking around and doing some research so you have your, an informative head on your shoulders when looking to trade this sector. And now we'll take a look at the charts and the longer term setups that I think are going to give us some significant opportunity either late 2018 or perhaps early 2019. So on these charts, we're going to be looking at the dollar, XAU, USD. Then we'll look at the underlying GDX and GDXJ, which the leveraged ETFs trade based off of. And again, I'm looking longer term. I'm looking at monthly charts that are tightening into patterns that I think are going to give clear breaks that lead to multiple months in the direction that the break does occur. I'm a day trader, so for me to do this is just me preparing, seeing an opportunity is approaching. And again, I'm not going to try and time anything. I'm going to wait for the clear breaks. And that could happen sometime in the next 2 months. It could happen in 6 months. I don't know when it's going to happen, but I know that when it happens, we're going to see a spike in volume and volatility. So here on the dollar, this is the monthly time frame, and we pulled back significantly, but look at the last bounce over the last few months. We broke the lower high pattern. So I'm keeping an eye out for the dollar to set a monthly higher low and higher high. If that did follow through and that's how it played out, that would be bearish on gold, and we would likely see the miners with bear breaks, and that would have us looking at bullish plays on the bear miners. So keeping an eye on what the dollar is doing overall. Here on the monthly time frame for XAU USD, I'm watching a bit of a ascending triangle pattern where we have essentially a triple top here, or a quadruple top looking at the monthly in the 1360s, and there's an uptrend of higher lows to be watching, and it's all the way down here. So depending on where you draw this trend line, you could say we already broke it, but I'm pretty much just looking visually and I'm looking at price levels. So I'm not going to put a trend line and act on that. I'm going to watch these higher lows. So we have a higher low here, and we had another one, and then the most recent one. So this is the most important short-term support for me. Make that 1236. if we break 1236, that's a clear bear break. In my opinion, we're going to see the bulls bounce before we break this support level and defend it. And again, we could stay within this range for another 6 months for all I know. So I'm going to be keeping a close eye on it, but there's a potential bottom fishing play with this support level. If we drop down closer towards 1236, you could make a bullish entry and set a stop loss if that level breaks, looking for a long-term trade. But again, making sure to keep in mind that the tightening pattern breaking is the ideal trade in order for looking for momentum and follow through. But that's another one that is going to potentially play out while we patiently wait. So aside from watching that long-term monthly pattern, which again, the last 6 months or last 5 months haven't seen a ton of action aside from a pullback, I'm going to be watching GDX, which is the senior miners, and then GDXJ, the junior miners. Look at these monthly equilibrium patterns. And as you know, I love these equilibrium patterns when they get really tight. Clear breaks then follow through. We have our high, low, lower high, higher low, another lower high, pretty much a double bottom there. We actually did break support by 5 pennies, but bulls reacted to holding that support. Another lower high and another lower high. So the range that I'm watching on GDX, 2084 support and 2331 resistance. That's still about a 15% range. So although it looks tight here, it's because it's on the monthly time frame. So we could pull back, form another higher low, and again, stay within this pattern. Look at the volume dropping off. Very common for this tightening equilibrium pattern, and this is going to be one to watch for a volume spike. We had back here, look at all this volatility. We went from $12.40 up to $32. So essentially a 150% move. And from there, we then pulled back significantly. So we had a huge bull move and a huge bear move. And again, if you're looking at 150% on this, that means the leveraged ETFs were going over 400%, 450% or so in just, how many months was that? 3, 6, 7 months. So that's when there was volatility. We had the chat room with the commodities, and that room was extremely busy. And ever since we've started tightening, there's just been less and less activity, and people drop off. That happened in the Canadian MJ room when we were looking at consolidation there. It's currently happening in cryptocurrency as we're consolidating in cryptocurrency. And it's just market cycles. We see a big boom. We see volatility. We see ranges tighten while the price action and price discovery is found in that new price range. And then we see a break from it, and the volume picks up and the volatility picks up all over again. So I'm absolutely getting ready for the spike in volatility and volume that is coming in this space, and we're going to see a spike in interest in trading it when that happens as well. So that's the tight range we're watching on GDX. Again, the two tickers for GDX are NUGT and DUST. For GDXJ, similar pattern. I already drew the equilibrium. High, low, lower high, higher low, lower high, higher low, lower high, higher low. There's another lower high in here. So the range here is 2988 support and 3436 resistance. Again, we have a lot of space within this range. We could stay there, the volume dropping off, tons of previous volatility, and again, a spike is coming. Whether it's a bull break or a bear break, I don't care. I'll play it whatever direction it breaks, and that's going to be a really nice trade setup. So just some examples, NUGT long-term. This is the monthly chart. So if NUGT is trading based off of GDX and GDX is in an equilibrium, why is NUGT in a downtrend with clear lower highs and lower lows? The answer is time decay. So this is why you do not want to invest in these names, because it is weaker than GDX, because time decay over time is wearing it down, lower highs and lower lows. So here's JDST. This is the bear of the junior miners. Again, very clear equilibrium pattern here on the monthly. We've been within it now for the last year plus. That is a long time. The range is clearly tightening and breaks are coming. It's just not coming very quickly. If this were a daily pattern, I'd be looking for a break within a week or two. But because it's a monthly pattern, I'm looking for a break within maybe 2 to 4 months. So we'll continue to check back in. Again, now is the time to prepare yourself. This is why I'm putting this video out before the action. It'd be easy to, put the video out and say, well, now here's the action and here's the trades. But this is where we get prepared for a sector and the volatility that's to come. So feel free to ask any questions in the comments. By all means, again, step out there, do your own research, get prepared, and keep an eye on these setups. Thanks for watching.